Here, as we mentioned at the top of the show, dollar down and yields down. Seemed like it was just a matter of time before investors tried to buy stocks here. Let's bring in Alan Nuckman, Chief Market Strategist at BullseyeOption.com. Alan, you want to invest in the U.S. or you want to invest in China?
Well, I'm your good news guy. So
I know.
But the whole big picture, all right? You can't ignore last month, the biggest one-month rally we've seen since 2020. Earnings growth. We were only expecting 4% earnings growth. We got 6 so far, so we're beating it. And the best part, like you talked about, is the dollar down. The Fed's getting the results it was looking for, and it looks like that was a last gasp in the dollar if you look at rates further out. And if that happens, then we're going to see a commodities comeback, and that's the play for today.
Okay. So the commodity comeback, if we are going to reopen, crude down 5%, though. We're breaking through $95 today, testing the low of this range. You want to buy that dip?
Well, crude's between 90 and 110 here recently, so I don't think it's over for crude. So, yes, I'm looking at some of these oil and energy stocks on these pullbacks. We talked last week, I think it was, about Alcoa. We looked at SunPower as an energy play. So what I'm looking at here today is my hometown stock, Cleveland Cliffs, iron ore. It had traded between 15 and 25 for 3 months. Bottom base, made some bullish divergence where it made new lows but not new highs and implied volatility. That's when the shorts get squeezed. There's a gap up above around 20, so that could get things started, just like you saw how U.S. Steel got started. So that's the play I'm looking at here. From risk reward, it's down 50% off its March highs, but it's still up 220% in the last 2 years of trade.
Wow. So when you buy the call here, you're looking for a major turnaround because Cleveland Cliffs just 10 days ago, but it was before earnings, put in a new low. It seems like earnings have been helping keep the stock together here the last couple of weeks.
Yeah, we're talking about real value, real companies that really produce things that we really need. So, you know, it's as real as you can get. The PE ratio on this is 3 or so. So from a risk reward standpoint, there's a lot of upside potential. Again, filling that gap would be a confirmation, and then we could get just to the top end of the range. This option is going to do very well. So again, it's an in the money option. The $15 call. The low on this stock is 14 and change, I think, 14.30. So this option's a couple dollars in the money. It's got a high delta, and most importantly, January, 6 months of time. I know it's the middle of summer, and we got hot stocks right now, but you know we've got a lot of time for this to develop further as some of these laggards come back after a bit of profit taking. That was exactly what the Fed wanted us to see.
Okay. So, Alan, when we've been talking, you've mostly been targeting the specific stocks. I mean, I know that's how you like to trade, but you'll trade the broad market too. Are you impressed with how far the Nasdaq's come? Because Nasdaq were trading above the June highs. S&P were not yet. Are you seeing the all clear, or do you want to get a few more boxes checked?
Well, it will be a confirmation. I'm buying, I'm bullish, and I'm putting my chips down on the buy side. But the confirmation will be a move above those June highs for the S&P, above that 4,200. Now, if you could just look at this technically and ignore all the scary psychology of what's happened in the last 6 months. Again, it's only been 6 months since we made all-time forever highs in the market. If you can ignore that and you looked at this price pattern, all right, 4,200 is also the halfway point of the drop from the top. Now, every time that it's gone above the halfway point, it's made new highs. So, you know, you can look at it here. We've been trading between 3,600 and 4,200 now for a couple of months. A break above that technically targets 4,800, and that would be new high. So it's not over in my mind for stocks. There's still a lot left. And the fact that interest rates, you and I had a little discussion last week, and we can throw my boy Ben in there too. I looked at that as a sign of stabilization if we broke below 70. And I think the market likes it. I think the market loves what the Fed's doing. I think the market loves the reaction. And, you know, everybody is happy. Nobody's happy, but everybody likes the results of what's happened in the last couple of months since the Fed got fully involved.
Since the market started rallying. Definitely. And to your credit, you were still a believer that yield stocks inverse relationship would hold as it has. So that has been the right analysis. Alan, thank you, sir. for the
It was
trade.
broken for a bit. It was broken for a little bit. You know, that's the first time in my 30 years that the relationship was broken, but I think it's going to get back to where it's been.
Okay, and it looks like it. I mean, stocks up past month, yields down, bonds rallying through potential resistance. So Treasury market again up this morning. We'll see if the NASDAQ bid holds. Thank you, Alan Nuckman, the Cleveland Cliffs trade, the chief market strategist at Bullseye Options. Coming back, let's talk